Early birds, listen up. Tax season is upon us.
Yeah, that's right. The IRS will begin accepting returns Monday for 2022. But there are some changes for next year that taxpayers might want to be aware of now. The IRS has raised the standard deduction to account for inflation. Single filers can deduct almost $2,000 more than the previous year, and joint filers will be able to deduct almost $1,000 more. Let's bring in Toby Mathis. He is a founding partner at the law firm Anderson Business Advisors. He's also the manager of their Las Vegas office. Tell us how these increased standard deductions are going to be affecting taxpayers.
They adjust your taxes, the tax brackets every year for inflation. And for 2023, what we see is what calculates out to about 7%. It's 6.94 on some, and it's right around in that range. But what they do is they increase your tax brackets so that you don't have bracket creep, which is when you make more and then you find yourself in higher brackets. So They move the bracket along with it.
Funding your maybe health savings account, that's something folks advise. Thumbs up on that.
That is a triple threat. So the beautiful part about the health savings account is not only do you get a deduction for making that contribution, but if you use it for health expenses, you don't pay tax even on the growth, unlike an IRA, where if I put money in an IRA and I pay tax when I take it out. In health savings account, that's not the case. As long as you're using it for medical expenses, you can still, you don't pay anything on any of that growth. So the thing could drop to double, triple, quadruple. You pay zero tax on it.
I'll tell you what, those things sound really complicated. I used that for the first time this year, funding a health savings account, letting it grow, using that to pay for medical expenses. Then I'm like, wow, this is the smart stuff all the tax experts say you should do.
And that's so much better because you don't lose it, unlike some of the other tax advantages you try and take, you try and use, and then you find that you didn't actually pay those expenses on time, and and then they're out. So
what else you want to tell us, Toby? Go ahead.
I was going to say that one actually gets better. So they did change the law where it used to be, hey, you had to use it on the health expenses, and then they would penalize you and tax you if you didn't. Now they take away the penalty. I think it's 65 if you get. So if you're older and you're just not going to be able to use all that money on your health, then you could just pay the tax on the way out. So like it's not like they beat you with it.
Great.
That's really interesting information. Good information that clearly we're all learning.
You seem surprised.
Well, this is
it can be a dry topic.
Toby Mathis.
Thank you, Toby.
Appreciate it.
My pleasure.